Hey guys, today we're talking about how to build a £100,000 dividend or growth portfolio on Trading 212 or Freetrade or any of your investing apps out there. Now £100,000 is widely agreed to be the precipice at when compounding really starts to take hold, and it is also known to be the hardest milestone to achieve because getting that first 100,000 is really difficult because the compounding doesn't quite happen that much. So today I'm going to go through a few things with you just to help you along the way on that journey to building towards that £100,000 milestone. If that sounds like something you're interested in, please smash that like button, consider subscribing to my channel, and I'll see you in there. Hey guys, welcome back into the video. So the first question we're asking is, why are you investing? Ask yourself that question. What is your timeline? How long are you going to be investing for? And what are the goals that you want to achieve? Are you looking to grow your money in a roundabout way and start growing, and you're happy to sacrifice the dividends for that? Are you looking for a dividend paying portfolio that's going to compound in terms of dividend payments and pay you that way? Or are you looking for dividend growth, which is somewhere in the middle where the share price will likely grow as well and give you capital appreciation, and you'll get dividend growth as well in terms of each year the company that you've invested in is going to raise its dividend by a considerable amount? Ask yourself some questions. What are your targets? How long are you going to be investing for? And are you going to try and retire off this? That leads nicely on to conducting your research into the stocks that you're going to buy. Now this cannot be overstated. Research is your friend, and take your time. There is no rush to researching a stock. If you are going to conduct your research, make sure that you take notes on it, you do some comparisons and compare the stock that you are looking at to competitors in its field, and make sure it really is the best stock for you. Check out its history, check out the buying analysts' forecasts, check out the analysts' forecasts, and then apply your own rules to it, which I've mentioned in my other videos, which you'll be able to see in the description below, about how to analyse a stock and really choose if it's a good growth stock or if it's a good dividend stock. Now once you've achieved this, there is no rush. You can then start to put some money together to start acquiring chunks of that company as and when you go. Now that you're moving into a position to start acquiring and buying stocks and chunks of a company, you need to have the income to do so. So an assumption that I'm going to make in this video is that you have the spare cash to invest, and you've already set yourself up an emergency fund to cover 1, 2 or 3 months expenses depending on how secure your job is. A minimum of 1 month expenses is widely acknowledged to be a absolute minimum, so you can survive without cashing out or selling your investments for at least a month should the worst happen. Now that is something, if you haven't done, save yourself up that first before you start investing, because you do not want to be selling investments to cover expenses that crop up at home because you haven't got the money in your bank account to do so, because that would mean that you could end up potentially selling at a loss. Now personally, a good rule for beginners is to use the 50-30-20 rule. So you have the 50% for your expenses side of things, you have the 30% for your needs, so nice things like going out on, like going to the cinema, or you want, should I say, going out to the cinema, going out for nice food, enjoying your lifestyle, so to speak. And then 20% of your wage should be either saved or invested. And then the more advanced that you get at this, obviously the more that you can invest. So if that's a really good place to start. So if you earn £2,000 a month, then you should be looking to try and invest or save at least £400 worth. Now that can start the process in getting and acquiring this £100,000 portfolio. It will be a slow process, going to make no bones about it, but you have to start somewhere and you have to start that ball rolling. Once you've got your targeted companies and you know what you're investing in, get that money get it in there and start buying stocks. Now you can compound the dividends that you get paid, so make sure they are always reinvested. And then dollar cost average is a great way to acquire shares over time. We don't all have £50,000 to start with. The more you can start with, the better. But most of us are going to keep chipping away, keep adding in that £400 a month or more, whatever you can spare, to build towards that portfolio. Now this is going to take time. Time is your friend, and that is going to allow the dividends to grow over the time and the stock price to grow over time. But it's going to take you months and months, years and years of constant upkeep and adding to this portfolio to build that first £100,000. Now you have to stay dedicated to this, guys. Whether it's a growth portfolio, whether it's a dividend portfolio, you have to stay dedicated to it. This isn't going to happen overnight. It's not penny stock investing. That's a higher risk side of things. This is something where you want to put the majority of your money to stay and just grow over time, to the point where eventually you can either cash it out on the growth side of things and retire off the lump sum that way, or you can retire off the dividends being paid and have that pay you a monthly wage. Moving on nicely, I would like to say, don't be a sheep. Don't follow the crowd into this, that and the other stocks. Keep in these portfolios, keep away from penny stocks and hype stocks or anything like that. Use this just to build your lower risk portfolio for the long term that you can bank on the gains. Don't be a sheep and go into other companies that are on the hype on Reddit or on the hype on Twitter or anything like that, because this could seriously cost you a lot of your hard-earned cash and a lot of your hard-earned growth or hard-earned dividends. And we don't want that. We're looking for safe, solid, consistent returns, and that is the way over time to get yourself to a £100,000 portfolio or beyond. Use market sell-offs, market crashes, market corrections as your buy opportunities. I'm not saying save up funds and then wait for the market crash, because we don't know when that's going to happen. The next one could be years away, it could be next week. Nobody knows when these sorts of things are going to be triggered. So in my opinion, you should dollar cost average what you can from your salary each month, and then if you've got a little bit of spare cash, keep that spare ready to deploy in case there is a market crash, and you can use that money to get even better value for your money by buying. You don't necessarily have to buy right at the bottom of the dip. Just make sure that you're buying either on the way down towards the bottom or a little bit on the curve on the way up. If it is below what your cost average is in your portfolio, and it is a really good company to be buying, a great dividend company like Unilever or Coca-Cola or something like that, and it's below the average in your portfolio, then that is a great opportunity to buy and bring down your average level, and then that compounded over time will give you an even better return in the longer term. And that is exactly what we're looking for here. Consistent building blocks built over time, going towards that first £100,000. When you get to that level, you are really getting there. You're beating most investors on most platforms at that point, and you should really give yourself a massive pat on the back. It will be hard, it will be arduous, it will take time, but stay dedicated and you can definitely achieve it. The exit strategy at the end, once you've achieved your £100,000 portfolio, it depends on where you want to go. A lot of people will just use that as the first start going forward. So that first 100,000 is just a stepping stone onwards towards $1 million. But if you've used that to grow and you're going to use it as your house deposit, or you're going to put your kids through college or university or whatever, then that might be the time for you to start cashing out on your investments or moving it from the growth portfolio into a dividend portfolio and boost your income that way. At that point, it's really up to you. Most people will use it as a stepping stone, a milestone. Well done, but it's time to get on to the next one. Thank you very much for watching today, guys. If you could please smash the like button so we can get this video out to help more people, that would be absolutely amazing. If you can consider subscribing to my channel as well, that would be absolutely awesome. And I'll see you in another investing episode. Catch you later.